So let's bring in Robinhood Markets CIO Stephanie Guild. All right, Stephanie, before we get into your review process, are you in the camp that says, hey, retail investor sentiment being bearish is actually positive for the stock market?
No, I actually think retail sentiment this time around should be considered not from the kind of do the opposite
Contrarian,
perspective,
right? Yeah.
but actually like they're very plugged in. And I say that because if you pay attention to anything on X, like sometimes that's how I'm hearing about things way faster than kind of regular news. And so I actually think they're pretty astute at what's happening right now.
No, they are. They've come so much further away. You know, it's usually the older folks on Wall Street who believe that kind of stuff. They don't know how smart these people are or how dedicated they are to being on top of things. But I'm going to get it to you, gauging your optimism. I was looking at, you talk about, following the 10 largest stocks, earnings expectations, credit markets. What about the next 10 stocks and the next 10 stocks after that? Because I'm seeing some amazing action. Today, Light is up $45, right? I mean, so there's some really amazing stuff beyond the names that carried us this far, like Mag 7 and a few others. But beneath there's some really compelling news stuff happening.
Yeah, I mean, I think the AI story, like nothing's stopping that train. But I've talked about this before, I think last time I was on with you, but the largest companies are generally the hyperscalers and the ones that are spending the CapEx. And I think you want to go where the CapEx is being spent.
Right.
And that's where, this whole kind of photonics boom is where Light is, where Coherent is. That's also up today. So it's not that just because of what's happening in the greater market space, you can't find winners. It's just, I don't think it's going to be in the largest companies.
I got you. Well, this is fine, right? I mean, you're going to send trillions of dollars and it's floating down. That's good. That brings me to earnings, right? So you talked about earnings, and I had this chart earlier this week. The consensus bottom up 317 for this year, 370, 15%, 17% growth. Earnings have been pretty good. Should we start doubting that now? We know things may change if oil prices linger this high for a long time.
I actually I thought they were too high at the start of the year, and I think if can they really go much higher from here? And I think expectations are everything when it comes to earnings. So if everything's already expected to be very strong, you really have to level up to kind of impress
Which we've seen this last earnings season. I mean, they were killing it. Even today, Micron had the earnings report of a lifetime, of a gazillion lifetimes, and the stock goes down to 1.7%.
I know, but that's because if you think about the future of AI, actually the inferencing chips, right, instead of the training chips, are the ones that the market is starting to think is where the growth is, and they actually don't use that. Right. They don't use what Micron produces. So it's actually kind of a negative. Like, can this huge growth actually continue? Well,
for the near term, it probably will, because that guidance is pretty strong. Private credit. I like what you wrote about this, that the concerns about this are not unfounded. Listen, if it was just them blowing themselves up, fine. But I remember when Wall Street blew itself up and everybody in America had to pay the tab. I'm worried about contagion there. How do you see it so far?
I'm worried about contagion too, because I think private credit was a really good idea, and then as soon as rates went up, to me, it stopped being a good idea. But the private credit space, they make money from getting more and more investors, and I think it did kind of spread into the retail space a little bit. Also, you did have banks start to actually lend to these private credit firms, and that's actually what, that was the part that wasn't supposed to actually happen with private credit.
But it was looking like easy money, and maybe for a while it was easy money. All right, let's talk about this, the reliance on the so-called modern portfolio theory, the way our grandfathers used to invest. You say that's not the only way to look at markets anymore, right? You've got boomer spending, retail investors, the AI structure. So how does someone encompass all of these things as sort of the new paradigm, if you will, with the older established way of doing things?
I think the older established way of doing things is how you define sort of your level of risk that you want to take, how much you put in stocks versus cash versus bonds versus gold. And then it is a stock picker's market. And so I encourage, for those that are willing to do the work or invest with me, really pay attention to what's happening in the market, because the boomer spending meant that a lot of money was coming out of, I should say, the index funds that were previously going into, in 401ks. And there's a lot of other structural things happening.
All right, before I let you go, and I got like 30 seconds to go, I was shocked at some of the top net sellers. In a way, not necessarily CoreWeave, that's sort of a controversial name, but Nebius had that monster quarter. They got $2 billion from NVIDIA. I know it pulled back on that offering.
Take out a lot of debt.
Yeah. And so what's amazing to me, though, is that it seems like the debt story, raising money, is far more significant than anything else going on right now. I'm in a few stocks and they're doing extraordinarily well. As soon as they say we're going to raise money, they get hammered.
Well, if you're looking at what's happening in rates, and then now we have this threat of inflation, I really think like if these are the ones that are actually having to raise debt, it's going to hurt their margins.
All right. Great stuff. Always appreciate talking to you, Stephanie. All right, folks.